Hello and welcome back to our second video dealing with job order costing, cost flows, and external reporting. In this video, we're going to go ahead and prepare the schedule of cost of goods manufactured as well as the cost of goods sold statements. These are very in-depth, but as long as you understand the flow of the costs, shouldn't be too difficult. So let's go ahead and look at these schedules. And the first thing we need to realize, and I think once we kind of go through it, I'm hoping that aha moment's going to hit and say, yeah, you know what, that makes sense. The reason why is we've been working with direct material, direct labor, manufacturing overhead for the past two chapters, right? Chapter 1, we saw how to prepare product costs, total product cost, unit product cost. So we know that direct material, direct labor, and manufacturing overhead are our product costs. So all we're doing here with the schedule of cost of goods manufactured and, as we'll see, the cost of goods sold statements is preparing schedules that show direct materials, direct labor, manufacturing overhead costs that were first used in production or used in manufacturing, as well as those costs that were recognized as sales, as sales expense or cost of goods sold. Okay. Um, when we go through these schedules, we're going to show that the cost of raw materials and the cost of direct labor used in production are the exact costs, right? And that makes sense because we saw in the previous video, raw materials, direct labor, all those indirect costs are allocated to the product in the WIP account, right? Manufacturing overhead, it's still going to be applied to production. So nothing new there, right? The only real, the only added piece is, and we're framing this cost of goods manufactured schedule to show that, hey, these are the costs that are associated that were, or that represent goods that were finished during the period. So, remember, accounting is a chronological record keeping system, right? What we do first, what we do second, what we do third, what we buy first, what we buy second, what we buy third. So, if you keep that in mind, we're just showing data of here's what we did over the entire period, but here's the ending number. Okay, so this slide's really important here, right? And you see on the left raw materials, right? How do we calculate raw materials that were used in purchase? You see a lot of verbiage there, right? But if you think about it logically and conceptually, it makes sense, right? And I'm going to give you a little, well, at least I think it's easy, let's put it that way. An easy way to remember this, right? And I always try and relate it to something that I know or something that I use every day. All right. Now, in my financial accountings class, I always ask how many people balance your checkbook. Nobody raises their hand because nobody does it because everything's online now, right? Well, if you would balance your checkbook, right, you always have a starting amount that you start with, right? Then you add money, right? So if you take the money that you started the week with plus your paychecks, that gives you what's available to spend for the entire month, right? Then if you take your ending balance of your checking account and you subtract it from what's available, that's going to tell you what you spent throughout the month, okay? Right? If you think about it that way, that's all we're doing with these inventory accounts, okay? What did we start with? What did we add? What do we have left, right? If we take our beginning plus what we added, that gives us what we have to use for the entire month. if we subtract out that ending number, that tells us what we used. Okay, so if you think about it that way, that's how we calculate a lot of these direct material accounts or raw materials account, the WIP account, the finished goods account. Okay, so let's look specifically at raw materials. We need to figure out, hey, what raw materials did we use in production, right? Because the amount of raw materials that we used in production is part of our manufacturing costs, right? Because we use these costs to make widgets or bicycles or whatever. So how do we calculate the amount of raw materials used in production? It's very easy. First, we start off with the beginning balance. The beginning of the month, what is that balance of our raw materials inventory account? Okay, let's say it's $10. Great, easy. During the month, we purchase raw materials, right? Makes sense. Let's say we have $100 purchases of raw materials throughout the month. So if I take my beginning raw materials, the amount that I started with on the first day of the month, plus all the purchases that came in during the month, or that I made during the month for raw materials, that gives me the amount of materials that I have available to use in production. Makes sense? At the end of the month, I count my raw materials inventory account and I say, hey, you know what? I have $20 left. Okay. Well, we had $110 worth of raw materials to use. At the end of the month, we counted our inventory and said, hey, we only have $20 left. So what's that mean? Well, that means that I must have used $90 of raw materials. Okay, so that's what we do. That's what we do right here. We calculate the raw materials that were used in production, and that flows over to our part of our manufacturing cost. Okay, this is no different than saying, hey, the direct materials that were used, boom, right here, right? All right, let's look at the next one. Okay, then once we calculated our raw materials that were used in production, right, or the direct materials that were used in production, we then add direct labor, we add our manufacturing overhead. That equals our total manufacturing cost. That makes sense, right? Because think about back in chapter 2, direct materials, direct labor, manufacturing overhead. Here's our total manufacturing cost. Nothing new, we've already done this, right? Or our total product cost. Okay? Once we end up with our total manufacturing cost, we need to figure out, okay, what's our WIP, right? How much do we have in WIP? Well, that's easy. Totally easy, right? Again, we go back to that idea of what I start with, what did I add, that equals everything that I have available. I get that ending number, and if I subtract everything that's available minus the ending number, that tells me how much I used. Makes sense, right? We do the same thing with WIP. We take the beginning balance in our WIP account. To that, we add all the manufacturing costs, all the costs that we add to WIP. What are they? Let's say they're, we use easy numbers again. Let's say it's $100, okay? So we started beginning WIP with $5. We saw that we added direct labor, direct materials, manufacturing overhead in the amount of $100. So that means that now we have a total work in process for the period of $105. That's pretty easy, right? Well, what comes next? Well, we know what we have available in WIP, but how much of that balance is left at the end of the month? Well, we do an inventory count and we count, partial pieces and all that other good stuff, and we see that, hey, you know what? We have $5 left at the end of the month of our WIP account. Okay? So if we take the 105, which is our total work available, subtract out that ending work in process inventory account, that gives us the costs of goods manufactured. Pretty easy. That's how you calculate cost of goods manufactured. First, you use the raw materials inventory account to calculate how much direct materials did I use. You add your direct labor, you add your applied overhead, that gives you the total costs, total manufacturing costs. You then look at your WIP account. You say, okay, I have a beginning WIP balance. I know the total manufacturing costs that I added. I'm going to add those two together. I get the total work in process for the end of the period. I subtract out that ending work in process inventory number I have. That equals cost of goods manufactured. Not too shabby. Okay? Now, how do I get this cost of goods sold, right? Well, remember, the cost of goods manufactured is used to help us determine what our cost of goods sold are. So again, I need to figure out the cost of goods manufactured, right? I already figured that out in the last slide, right? Let's look at it again, just to kind of make sure we understand it and get it under our belts conceptually, right? Take the beginning WIP, add the manufacturing cost for the period. That gives you the total work in process for the period. Subtract out the ending work in process inventory. That gives us the cost of goods manufactured. So what do we do with those costs of goods manufactured, right? Because they left production, the production department, and they went to the shipping department. Well, remember, in accounting terms, that production department is our WIP account or our WIP basket. The shipping department is our finished goods basket or our finished goods inventory account. So we got to move as those physical units of production leave the production facilities and flow to the shipping department. We got to move those costs. Okay, so how do we do that? Well, we got to put them in finished goods because they're in the shipping department. Shipping department's our finished goods basket, right? How much did we start with in our finished goods inventory account? Well, I don't know. We need to figure that out, right? They're going to give us the number. Let's use easy numbers again. Let's say $5, right? At the beginning of the month, we have $5 worth of finished goods that are available to be sold, okay? To that beginning balance, we have to add the cost of goods manufactured, right? So if we take the cost of goods manufactured plus that beginning finished goods, that gives us the total amount of goods that are available for sale. Well, we need to figure out the cost of goods sold, meaning how much did we sell? What's our selling expense, right? Well, we take the cost of goods available for sale and subtract out that ending inventory balance. Okay, so let's say, for the sake of argument, $5 is the beginning balance, $100 is the cost of goods that was manufactured that we added to this account. Cost of goods available for sale are what? $10 or $110. Okay, so let's say that we have, or I'm sorry, $105. Yeah, 5 plus 100, 105. Okay, 105 cost of goods available for sale. We determined that our ending inventory balance is $10. So if we take 105 minus 95, that gives us $10, right? Or $95. So that means that we sold $95 worth of finished goods. The cost of goods sold is $95 that flows from the balance sheet to the income statement. Okay, we will work on an example of this a little later. In your study guide, there's problem 14, how to prepare it. We will walk through this. Okay, but before we do that, I want you to try it on your own. Look at these slides and kind of fill it out. Okay, fill out the numbers, calculate, how much direct labor did we use, what's our direct materials, what's our overhead applied, and go from there. But okay, let's try a quick check. Okay, so this isn't too bad. We need to figure out what is the cost of direct materials used? Okay, so let's read through the problem. Beginning raw materials inventory account, oh, that's our beginning, is worth $32,000. Okay, beginning, $32,000. During the month, we make during the month we purchase $276,000 of raw materials. So 276. So we need to add our purchases. So if we add up the $32,000 of beginning inventory or raw materials inventory plus the $276,000 of raw materials inventory that we purchased, we get $308,000. This is raw materials that are available to be used. So I'm going to abbreviate and say available, or avail for available. All right. Then they say, oh, by the way, account at the end of the month. Hey, guess what? We got 28,000 of raw materials still present, right? So we have $28,000 of raw materials left. How much did we use? Well, that's easy. Since this is my ending, I'm going to subtract out my ending balance. And I'm going to subtract the $308,000, or take $308,000 minus the $28,000. I end up with $304. Huh? That's not one of our answers. Huh? What happened? What did we do wrong? Right? Actually, I added or subtracted wrong. That's the problem. 280,000. So our answer then is C. But again, I want to go through it slowly and see how it was calculated. Beginning plus what was added or purchased, what's available minus the expenses. Okay. So let's just check and make sure we're right. Yep. So if I were you, this is how we calculate raw materials. I would make sure that you maybe write this down, this calculation. Make sure you commit it to memory. Okay. That's something you're definitely going to want to do. All right. So let's look at the next one. Direct materials used in production totaled $280,000. Direct labor was $375, and $180,000 of manufacturing overhead was added to production during the month. What was the total manufacturing cost incurred during the month? Well, that's easy, right? Because we remember back from chapter 2, direct material, direct labor, MOH. That gives us our product cost, right? Here's how much the product cost us. Well, product cost well, this is atrocious, I'm sorry, is the same thing as manufacturing cost. We're just using different words here. We know how to do this. I'm going to abbreviate manu cost. Okay, same thing, manufacturing cost. So, do we have direct material? Yep, direct material, 280,000. That's the same number we calculated in the second problem. Okay, it's my DM. My DL, right? Direct labor. It says here that direct labor was $375,000. manufacturing overhead was added to production for the month. Well, basically they're saying, hey, we applied $180,000 of MOH, right? So that's easy. We can add all this up, 280 plus 375,000. $280,000 plus 375,000 plus 180,000 gives us 835, or 835,000. It's the same thing we did in chapter. Oh, well, there it is. Okay, that's the same thing we did in chapter 2, right? If I were you, I'd make sure I know this. I know how to get the manufacturing costs incurred for the month, or the product costs, right? Because that's really what it is. Product cost. Okay. So let's look at another one. Ooh, they want us to calculate the cost of goods manufactured. Well, this is easy. Without even reading a problem, I know that the WIP account, or the work in process inventory account, tells me the cost of goods that were the cost of goods manufactured during the period. How do I do that? Well, beginning WIP is 125, or 125,000. Manufacturing cost added to the month were 835 plus manu cost. Well, this 835, that's the same thing that we calculated in the last slide. They tell us that, hey, we still have $200,000 of partially finished goods remaining in inventory. Okay, well, how much do I have available though? If I take the 835, which is the manufacturing cost that we added, plus the beginning balance of 125,000, I end up with 960,000. From here, I want to subtract out that ending WIP balance, because we're in our WIP account, which is 200,000. That's $760,000, which is answer C. Again, if I were you, I would put this on a note card, this little calculation right here, and make sure that I can commit that to memory and I know how to calculate cost of goods manufactured. Okay? So now, what we have to do here is calculate the cost of goods sold. Well, that's easy. I can definitely do that, right? How do I do that? Well, I know I need to look at my finished goods account. I'm going to abbreviate that as FG, not filled goal, finished goods. Well, what's my beginning balance in finished goods? Well, the beginning balance is 130,000. Okay. What did I add to that? I don't even need to read the problem. Why? Because I know in the previous slide, my cost of goods manufactured, which I'm going to abbreviate as COGM, was 760,000. So I'm going to add that to my beginning balance. What do I have available? Well, that's easy. 760,000 plus 130, 890,000 if I can add. Well, how much of this did I sell? I don't know. But I know what my ending balance of finished goods is. So I subtract out my ending balance my ending balance of 150,000. Which should be 740 if I added right. So let's see. Yepper. Okay. So again, they give us a pretty crappy answer here. If I were you, I'd maybe put a note card and I would kind of redo what we did here. Hey, finished goods, the beginning balance in finished goods, they told us was 130. To that I add the cost of goods manufactured. I add the two, beginning and cost, and what was added, the cost of goods manufactured. That gives me what's available. I subtract out my ending finished goods balance. I get the cost of goods sold. Okay, COGS, C-O-G-S, cost of goods sold. Let's look at, okay, that's actually it for those two statements. Again, if you can conceptually understand beginning, what was added, gives me what's available, subtract out the ending, that gives me what was used, you're good. Okay. I would strongly suggest you make sure you understand or learn, memorize those this calculation right here for the raw materials account and what we're calculating, which is the raw materials used in production. How to calculate the manufacturing costs for the month, making sure that you know that this is the it's supposed to be manufacturing costs, how to calculate what's added, and making sure you know, hey, this is how we get the manufacturing cost incurred. And then I would do the same thing for WIP, right? Making sure that you recognize, hey, we're in the WIP account. Here's how I calculate it, and what am I calculating? What does WIP account give me? Well, it tells me the cost of goods manufactured. Okay, and then the same thing for the finished good, or the cost of goods sold, making sure you recognize we are in the finished goods account, beginning balance of the finished good plus the cost of goods manufactured. Where does that come from? Well, we already calculated that from the cost of goods manufactured account, which is the WIP account. Subtract what's the ending finished goods from what's available to sell. That gives me my cost of goods sold, or my COGS. Okay. When we come back in our next example, or our next video, excuse me, we're going to look at how do we compute underapplied or overapplied costs, right? And how do we fix that? How do we make sure that we get the appropriate closing balance for our overhead account? So tune back in for that one, and we'll go through that one.